Let's get ready for the Arkansas Real Estate Exam with 100 questions covering key state laws, principles, and practices you'll need to know. And keep an eye on the bottom corner. There's something there that could make a big difference in your prep. We'll tell you how to use it in just a minute. Now, let's get started.
Let's review some basic licensing requirements and procedures. Arkansas licensing requirements and procedures. What is the minimum age requirement for obtaining a real estate license in Arkansas? Is it A, 16 years old, B, 18 years old, C, 21 years old, or D, 25 years old? The answer is B, 18 years old. In Arkansas, applicants must be at least 18 years old to qualify for a real estate license. This ensures that individuals have reached the age of majority and can legally enter binding contracts. How many hours of pre-licensing education are required to sit for the real estate exam in Arkansas? Is it A, 60 hours, B, 75 hours, C, 90 hours, or D, 120 hours? The answer is A, 60 hours. Arkansas mandates 60 hours of pre-licensing education. This ensures that candidates have the foundational knowledge necessary to practice real estate effectively and ethically.
Have you noticed the code in the bottom corner? Next time you're stumped, take that code to birdsy.ai for immediate help and a free study session with Birdsy, your personal AI study partner. Plus, you'll get access to hundreds of additional questions, helping you move closer to passing your exam with confidence. The next time you're feeling unsure or stuck, give it a try.
Which of the following is not a requirement for obtaining a real estate license in Arkansas? Is it A, complete 60 hours of pre-licensing education, B, pass the state real estate exam, C, submit a background check, or D, hold a college degree? The answer is D, hold a college degree. Arkansas does not require a college degree for real estate licensing. Applicants must complete pre-licensing education, pass the exam, and submit a background check. What is the purpose of the Arkansas Real Estate Commission in the licensing process? Is it A, to provide legal representation for realtors, B, to set property prices across the state, C, to regulate and enforce real estate laws, or D, to offer discounts on licensing fees? The answer is C, to regulate and enforce real estate laws. The AREC regulates the real estate industry in Arkansas, ensuring compliance with laws and ethical standards to protect the public and maintain professionalism among licensees. Continuing education requirements. What is the minimum number of continuing education hours required annually for a real estate licensee in Arkansas? Is it A, 5 hours, B, 7 hours, C, 10 hours, or D, 12 hours? The answer is B, 7 hours. Arkansas requires real estate licensees to complete 7 hours of continuing education annually. This ensures that professionals remain updated on industry standards and practices. How often must a real estate licensee in Arkansas renew their license to remain active? Is it A, every 6 months, B, every 2 years, C, every year, or D, every 3 years? The answer is C, every year. In Arkansas, real estate licenses must be renewed every year. This ensures that licensees remain compliant with current regulations and continue their professional development. What is the consequence of failing to complete the required continuing education before the license renewal date in Arkansas? Is it A, the license becomes inactive, B, a fine is imposed, C, the license is permanently revoked, or D, no immediate consequence? The answer is A, the license becomes inactive. Failing to complete required continuing education results in an inactive license status, preventing the licensee from legally practicing real estate until requirements are met. Arkansas-specific exam structure and content. Which of the following topics is covered in the Arkansas-specific portion of the real estate licensing exam? Is it A, federal fair housing laws, B, environmental regulations, C, Arkansas agency relationships, or D, property management? The answer is C, Arkansas agency relationships. The Arkansas-specific portion of the real estate licensing exam includes topics such as state laws and regulations, agency relationships, and specific contract requirements unique to Arkansas. How many questions are on the Arkansas state-specific portion of the real estate licensing exam? Is it A, 30 questions, B, 40 questions, C, 50 questions, or D, 60 questions? The answer is B, 40 questions. The Arkansas state-specific portion of the real estate licensing exam consists of 40 questions, focusing on state laws and regulations relevant to real estate practice. What is the passing score for the Arkansas real estate licensing exam? Is it A, 65%, B, 68%, C, 70%, or D, 75%? The answer is C, 70%. The Arkansas real estate licensing exam requires a passing score of 70% to ensure that candidates have a sufficient understanding of the material.
If you're finding this helpful, please take a minute to like this video and subscribe to our channel for more practice exams, useful tips, and complimentary study sessions with Birdsy.
Let's continue with Arkansas real estate laws and regulations. Arkansas-specific fair housing laws. Which protected class is specifically recognized under Arkansas fair housing law in addition to those federally protected? Is it A, age, B, sexual orientation, C, ancestry, or D, marital status? The answer is C. Arkansas fair housing law includes ancestry as a protected class, in addition to the federally recognized classes such as race, color, religion, sex, disability, familial status, and national origin. What is the time limit for filing a fair housing complaint with the Arkansas Fair Housing Commission? Is it A, 180 days, B, 90 days, C, 1 year, or D, 60 days? The answer is A, 180 days. Complaints must be filed within 180 days of the alleged discriminatory act. This time frame ensures timely investigation and resolution of fair housing issues. Under Arkansas fair housing laws, which of the following actions is considered discriminatory in housing practices? Is it A, charging a higher rent for pets, B, refusing to rent based on race, C, offering discounts to long-term tenants, or D, requiring a security deposit? The answer is B, refusing to rent based on race. Refusing to rent based on race is a discriminatory practice under both federal and Arkansas fair housing laws, which aim to prevent discrimination in housing transactions. Which agency is responsible for enforcing the Arkansas fair housing law? Is it A, Department of Housing and Urban Development, B, Arkansas Real Estate Commission, C, Arkansas Attorney General's Office, or D, Arkansas Fair Housing Commission? The answer is D, Arkansas Fair Housing Commission. The Arkansas Fair Housing Commission is tasked with enforcing state fair housing laws, ensuring compliance, and addressing complaints related to housing discrimination. What is a potential penalty for violating Arkansas fair housing laws? Is it A, community service, B, license suspension, C, fines and damages, or D, mandatory training? The answer is C, fines and damages. Penalties for violating Arkansas fair housing laws can include fines, damages, and orders to cease discriminatory practices, emphasizing the importance of compliance. Arkansas-specific contract requirements. What is the minimum required time for a buyer to review the seller's disclosure form in an Arkansas real estate transaction? Is it A, 1 day, B, 3 days, C, 5 days, or D, 7 days? The answer is B, 3 days. In Arkansas, the buyer must be given a minimum of 3 days to review the seller's disclosure form. This period allows the buyer to assess property conditions and make informed decisions. Which document must be provided to a buyer under the Arkansas Property Condition Disclosure Law? Is it A, Property Condition Disclosure Statement, B, Title Insurance Policy, C, Home Warranty Agreement, or D, Mortgage Pre-Approval Letter? The answer is A, Property Condition Disclosure Statement. The Arkansas Property Condition Disclosure Law requires sellers to provide a written disclosure statement detailing the property's condition to the buyer before the sale is finalized. In Arkansas, what is the primary purpose of the as-is clause in a real estate contract? Is it A, to ensure the property is free of defects, B, to guarantee repairs by the seller, C, to outline the buyer's repair responsibilities, or D, to accept the property in current condition? The answer is D, to accept the property in current condition. The as-is clause indicates that the buyer accepts the property in its current condition with all defects, and the seller is not obligated to make repairs or improvements. What is the legal consequence if a seller fails to provide the required property disclosure in Arkansas? Is it A, automatic contract nullification, B, immediate transfer of title to the buyer, C, legal action for rescission or damages, or D, requirement to provide additional warranties? The answer is C, legal action for rescission or damages. Failure to provide the required property disclosure can lead to legal action against the seller, including potential rescission of the contract or monetary damages for the buyer. Under Arkansas law, which party is primarily responsible for ensuring the accuracy of the property description in a real estate contract? Is it A, the buyer, B, the seller, C, the escrow agent, or D, the real estate agent? The answer is B, the seller. The seller is primarily responsible for ensuring the accuracy of the property description, as they are most familiar with the property details and boundaries. Overview of Arkansas real estate statutes. What is the primary purpose of the Arkansas Real Estate Commission? Is it A, to increase real estate sales in Arkansas, B, to provide legal advice to real estate agents, C, to regulate and license real estate professionals, or D, to set property tax rates for real estate transactions? The answer is C, to regulate and license real estate professionals. The Arkansas Real Estate Commission's primary purpose is to protect the public by regulating real estate practices. This involves licensing, education, and enforcement of laws to ensure ethical and professional conduct. Under Arkansas law, which of the following is considered an illegal practice in real estate? Is it A, commingling of client funds with personal funds, B, providing clients with a list of service providers, C, advertising properties on social media, or D, representing both buyer and seller in a transaction? The answer is A, commingling of client funds with personal funds. Commingling of funds, where a real estate agent mixes client funds with personal or business funds, is illegal in Arkansas. This practice is prohibited to prevent misuse or misappropriation of client money. Which of the following actions requires a real estate license under Arkansas law? Is it A, selling your own home, B, posting property listings online, C, providing general real estate advice, or D, negotiating the sale of a property for another party? The answer is D, negotiating the sale of a property for another party. Negotiating the sale of a property for another party requires a real estate license in Arkansas. This ensures that only qualified individuals handle real estate transactions, safeguarding public interests. What is required for a real estate contract to be legally binding in Arkansas? Is it A, verbal agreement, B, notarized signatures, C, written agreement, or D, witnessed signatures? The answer is C, written agreement. A legally binding real estate contract in Arkansas must include an offer, acceptance, consideration, and a lawful objective. It must also be in writing to comply with the statute of frauds. Which entity is responsible for enforcing real estate laws in Arkansas? Is it A, Arkansas Real Estate Commission, B, Arkansas Department of Finance, C, Arkansas Judicial Branch, or D, Arkansas Housing Authority? The answer is A, Arkansas Real Estate Commission. The Arkansas Real Estate Commission enforces real estate laws and regulations, ensuring compliance and protecting public interest by overseeing licensing and disciplinary actions. Now, let's look at Arkansas property ownership and land use. Types of property ownership, e.g. fee simple, leasehold, joint tenancy. What is the primary characteristic of fee simple ownership in Arkansas? Is it A, it provides the greatest interest in a property with full control, B, it is a temporary right to use the property, C, it requires the property to be held in joint tenancy, or D, it limits the owner's ability to transfer the property? The answer is A, it provides the greatest interest in a property with full control. Fee simple ownership provides the greatest interest in a property, allowing the owner to use control and transfer the property freely. It is the most common and absolute form of property ownership. Which type of property ownership involves two or more people owning property with the right of survivorship? Is it A, tenancy in common, B, leasehold estate, C, joint tenancy, or D, fee simple absolute? The answer is C, joint tenancy. Joint tenancy allows two or more people to own property together with the right of survivorship, meaning that upon the death of one owner, their share automatically transfers to the surviving owners. In Arkansas, what distinguishes a leasehold estate from other types of property ownership? Is it A, it grants permanent ownership rights to the tenant, B, it is a temporary right to occupy or use property, C, it automatically converts to fee simple ownership after a period, or D, it requires joint tenancy with the landlord? The answer is B, it is a temporary right to occupy or use property. A leasehold estate is characterized by a tenant's right to occupy or use land or buildings for a specified period under a lease agreement without owning the property outright. Which form of property ownership allows for unequal shares and no right of survivorship among owners? Is it A, tenancy in common, B, joint tenancy, C, community property, or D, leasehold estate? The answer is A, tenancy in common. Tenancy in common allows owners to hold unequal shares in a property with no right of survivorship, meaning each owner can bequeath their share independently. In Arkansas, what type of property ownership allows an individual to own property outright with the most extensive rights possible? Is it A, fee simple, B, leasehold, C, joint tenancy, or D, tenancy in common? The answer is A, fee simple. Fee simple ownership is the most complete form of ownership in Arkansas, granting the owner full control over the property, including the right to sell, lease, or bequeath it. Public versus private land use controls. Which of the following is a primary purpose of zoning laws in Arkansas? Is it A, to increase property taxes, B, to regulate land use and development, C, to provide public transportation, or D, to allocate water resources? The answer is B, to regulate land use and development. Zoning laws regulate land use to ensure orderly development, prevent land use conflicts, and protect property values. They designate specific areas for residential, commercial, industrial, and agricultural use. What is the main distinction between public and private land use controls in Arkansas? Is it A, public controls are voluntary, private are mandatory? B, private controls are enforced by the government? C, public controls are government-imposed, private are contractual? Or D, private controls apply to public lands only? The answer is C, public controls are government-imposed, private are contractual. Public land use controls are established by government entities through laws and regulations, while private land use controls are created by private parties, often through deeds and covenants. In Arkansas, which entity typically has the authority to enforce zoning ordinances? Is it A, municipal governments? B, private homeowners associations? C, state government? Or D, federal government? The answer is A, municipal governments. Municipalities or local government bodies have the authority to enforce zoning ordinances. They ensure compliance with local zoning laws to maintain orderly development and land use. Which of the following is a common example of a private land use control in Arkansas? Is it A, zoning ordinances? B, building codes? C, environmental regulations? Or D, restrictive covenants? The answer is D, restrictive covenants. Private land use controls often include restrictive covenants, which are rules set by property developers or homeowners associations to maintain property values and community standards. Land use and zoning laws. What is the primary purpose of zoning laws in Arkansas? Is it A, to increase property taxes? B, to regulate land use and development? C, to enforce building codes? Or D, to prevent property sales? The answer is B, to regulate land use and development. Zoning laws in Arkansas are primarily designed to regulate land use, ensuring that property development aligns with community plans and goals, thereby promoting orderly growth and protecting the environment and property values. In Arkansas, what is the impact of a buffer zone in land use planning? Is it A, it allows for unrestricted development in the area? B, it mandates residential development only? C, it separates incompatible land uses to minimize conflicts? Or D, it is reserved for agricultural purposes only? The answer is C, it separates incompatible land uses to minimize conflicts. A buffer zone in Arkansas is a transitional area between different land uses, reducing conflicts by separating incompatible uses, such as residential areas from industrial sites. It often includes landscaping or open spaces. How does Arkansas law typically define a non-conforming use in zoning terms? Is it A, a use that conforms to current zoning laws? B, a temporary use permitted by the city? C, a use that was legal under old zoning laws, but not under current ones? Or D, a use that violates zoning laws? The answer is C, a use that was legal under old zoning laws, but not under current ones. A non-conforming use refers to a property that was legally established under previous zoning regulations, but does not comply with current zoning laws. These uses are usually allowed to continue until changed or abandoned. What is a variance in the context of Arkansas zoning laws? Is it A, a change in zoning classification? B, a temporary suspension of zoning laws? C, a legal challenge to zoning laws? Or D, an exception to zoning requirements? The answer is D, an exception to zoning requirements. A variance is a legal exception granted to a property owner, allowing them to deviate from specific zoning requirements. It is typically granted when strict enforcement would cause unnecessary hardship due to unique property conditions.
Stuck on a question? Just think of the Birdsy link in the description as your friendly neighborhood superhero, swooping in to save the day with answers. Feel free to explore it now and return to continue. Simply hit pause, and we'll be waiting when you get back.
Condominiums and HOAs. What is the primary function of a homeowners association in an Arkansas condominium complex? Is it A, to sell individual units to new buyers? B, to manage common areas and enforce rules? C, to provide individual property insurance? Or D, to determine property tax rates? The answer is B, to manage common areas and enforce rules. An HOA in Arkansas manages common areas, enforces community rules, and collects fees to maintain shared spaces. This governance ensures property value and quality of life for residents. In Arkansas, what document typically outlines the rules and regulations for condominium living? Is it A, the property deed? B, the lease agreement? C, the Declaration of Covenants, Conditions, and Restrictions, CC&Rs? Or D, the zoning ordinance? The answer is C, the Declaration of Covenants, Conditions, and Restrictions, CC&Rs. The Declaration of Covenants, Conditions, and Restrictions, CC&Rs, outlines the rules for living in a condominium, detailing owners' rights and responsibilities within the community. What is a common responsibility of condominium owners in Arkansas regarding common areas? Is it A, paying monthly fees for maintenance? B, individually maintaining their section of the common area? C, ensuring all residents follow HOA rules? Or D, setting the budget for common area improvements? The answer is A, paying monthly fees for maintenance. Condominium owners in Arkansas typically pay monthly fees to cover the maintenance of common areas, ensuring these spaces are well kept and accessible to all residents. How does Arkansas law typically handle disputes between condominium owners and the HOA? Is it A, by filing a complaint with the State Real Estate Commission? B, through direct negotiation between parties? C, by immediately taking the case to court? Or D, through mediation or arbitration? The answer is D, through mediation or arbitration. Disputes are often resolved through mediation or arbitration to avoid lengthy and costly court battles. This approach is encouraged to maintain community harmony and reduce legal expenses. Environmental issues. What is the primary purpose of Arkansas's Wetlands and Riparian Zones Protection Act? Is it A, to promote agricultural development? B, to protect and preserve wetlands and riparian zones? C, to encourage urban expansion? Or D, to support industrial growth in Arkansas? The answer is B, to protect and preserve wetlands and riparian zones. The Wetlands and Riparian Zones Protection Act aims to preserve and protect these critical areas due to their environmental benefits, such as flood control, water quality improvement, and biodiversity support. Which of the following is a common environmental concern when dealing with property ownership in Arkansas? Is it A, air pollution? B, noise pollution? C, soil erosion? Or D, light pollution? The answer is C, soil erosion. Soil erosion is a significant environmental issue in Arkansas, affecting agricultural productivity and water quality, and is often a concern for property owners and developers. How does the Arkansas Private Property Protection Act impact land use regulations? Is it A, it prevents regulations from reducing property value without compensation? B, it allows unrestricted development on private lands? C, it mandates environmental restoration projects? Or D, it prioritizes industrial over residential land use? The answer is A, it prevents regulations from reducing property value without compensation. The Act ensures that land use regulations do not result in an unfair reduction in property value without just compensation. balancing environmental regulations with property rights. Which agency is primarily responsible for enforcing environmental regulations related to property ownership in Arkansas? Is it A, Arkansas Department of Transportation, B, Arkansas Department of Agriculture, C, Arkansas State Police, or D, Arkansas Department of Environmental Quality? The answer is D, Arkansas Department of Environmental Quality. The Arkansas Department of Environmental Quality is the state agency responsible for enforcing environmental laws and regulations, ensuring compliance to protect natural resources. Let's test your understanding of Arkansas agency law and ethics. Agency relationship laws. What is the primary duty of a real estate agent under Arkansas agency law? Is it A, to act in the best interest of the client, B, to ensure the highest commission, C, to maintain confidentiality with all parties, or D, to prioritize the interests of the brokerage? The answer is A, to act in the best interest of the client. The primary duty of a real estate agent is to act in the best interest of their client, providing loyalty and full disclosure. This ensures trust and compliance with Arkansas agency laws. Which of the following is required for establishing an agency relationship in Arkansas? Is it A, a verbal agreement, B, a handshake, C, a written agreement, or D, a mutual understanding? The answer is C, a written agreement. An agency relationship in Arkansas requires a written agreement. This legally binds the agent to act on behalf of the client, ensuring clarity and protection for both parties. How must an agent in Arkansas disclose their agency relationship to potential buyers? Is it A, verbally at the first meeting, B, in writing before any substantive contact, C, after the first offer is made, or D, only if the buyer requests it? The answer is B, in writing before any substantive contact. Agents in Arkansas must disclose their agency relationship in writing to potential buyers. This ensures transparency and allows buyers to make informed decisions. Under Arkansas agency law, what is the agent's duty regarding material facts? Is it A, to disclose only if asked, B, to keep material facts confidential, C, to disclose only positive material facts, or D, to disclose all known material facts? The answer is D, to disclose all known material facts. Agents must disclose all known material facts to their clients. This duty ensures clients have all relevant information to make informed decisions about the property. Fiduciary duties and client representation. In Arkansas, which fiduciary duty requires an agent to act in the best interests of their client, prioritizing the client's needs above their own? Is it A, confidentiality, B, obedience, C, disclosure, or D? The answer is D, loyalty. Loyalty is a fiduciary duty requiring agents to prioritize their clients' interests over their own. It ensures agents act without conflict of interest, maintaining trust and integrity in representation. Which fiduciary duty obligates an Arkansas real estate agent to disclose all material facts to their client? Is it A, loyalty, B, disclosure, C, care, or D, confidentiality? The answer is B, disclosure. Disclosure is the fiduciary duty requiring agents to inform clients of all material facts that could affect the transaction, ensuring clients make informed decisions. What fiduciary duty ensures that an Arkansas real estate agent must not disclose a client's confidential information after the agency relationship ends? Is it A, loyalty, B, disclosure, C, confidentiality, or D, reasonable care? The answer is C, confidentiality. Confidentiality obligates agents to protect client information even after the agency relationship ends, maintaining trust and respecting privacy. In Arkansas, Which fiduciary duty requires an agent to exercise competence and diligence in carrying out their client's instructions? Is it A, reasonable care, B, obedience, C, confidentiality, or D, loyalty? The answer is A, reasonable care. Reasonable care and diligence ensure that agents competently execute their duties, protecting client interests through informed and skillful actions. Arkansas Ethics Guidelines and Enforcement. What is the primary purpose of the Arkansas Real Estate Commission's enforcement of ethics guidelines? Is it A, to increase real estate sales, B, to protect the public and ensure professional integrity, C, to reduce the number of licensed professionals, or D, to simplify real estate laws? The answer is B, to protect the public and ensure professional integrity. The Arkansas Real Estate Commission enforces ethics guidelines to protect the public by ensuring that real estate professionals adhere to high standards of conduct, thereby maintaining integrity and trust in real estate transactions. Which of the following actions could result in disciplinary action under Arkansas ethics guidelines? Is it A, attending a real estate seminar, B, referring a client to a competitor, C, providing false information on a licensing application, or D, negotiating commission rates? The answer is C, providing false information on a licensing application. Providing false information on a licensing application is a serious ethical violation that can lead to disciplinary action, as honesty and transparency are critical in maintaining public trust. How often must Arkansas real estate professionals complete continuing education on ethics? Is it A, annually, B, every 2 years, C, every 5 years, or D, only upon license renewal? The answer is A, annually. Arkansas real estate professionals are required to complete annual continuing education on ethics to ensure they remain updated on ethical standards and practices. Which entity is responsible for enforcing ethical guidelines for real estate professionals in Arkansas? Is it A, the National Association of Realtors, B, the Arkansas Department of Finance, C, the Arkansas Attorney General, or D, the Arkansas Real Estate Commission? The answer is D, the Arkansas Real Estate Commission. The Arkansas Real Estate Commission is tasked with enforcing ethical guidelines, ensuring that professionals comply with state laws and ethical standards to protect the public interest. Let's continue with Arkansas property valuation. Basic principles of property valuation. Which principle of property valuation suggests that the value of a property is influenced by the availability of similar properties in the market? Is it A, principle of conformity, B, principle of substitution, C, principle of progression, or D, principle of regression? The answer is B, principle of substitution. The principle of substitution states that a property's value is affected by the availability of similar properties. Buyers will not pay more for a property if a similar one is available for less. What is the principle that suggests property value is determined by the most profitable use of the property? Is it A, principle of balance, B, principle of change, C, principle of highest and best use, or D, principle of contribution? The answer is C, principle of highest and best use. The principle of highest and best use states that property value is maximized when it is used in a way that is legally permissible, physically possible, financially feasible, and maximally productive. Which principle of valuation states that the value of a property is influenced by the future benefits it can provide? Is it A, principle of anticipation, B, principle of competition, C, principle of contribution, or D, principle of supply and demand? The answer is A, principle of anticipation. The principle of anticipation holds that property value is based on the expectation of future benefits, such as income or appreciation, that the property will provide to the owner. What principle suggests that the value of a property is maximized when it is in harmony with its surroundings? Is it A, principle of substitution, B, principle of progression, C, principle of regression, or D, principle of conformity? The answer is D, principle of conformity. The principle of conformity suggests that a property's value is maximized when it is in harmony with its surroundings, as it benefits from the neighborhood's characteristics and standards.
Notice the code in the corner? When you're stumped by a question, enter it at birdsy.ai for immediate help. Enjoy complimentary study sessions and access to hundreds of additional questions to help you pass your exam with confidence.
Sales comparison, cost and income approaches. What is the primary advantage of using the sales comparison approach in Arkansas property valuation? Is it A, it requires less data than other methods, B, it reflects current market conditions, C, it is the most cost-effective method, or D, it requires no adjustments for differences? The answer is B, it reflects current market conditions. The sales comparison approach is advantageous because it reflects current market conditions by comparing similar properties. It is especially useful in active markets where recent sales data is readily available. Which of the following is a key component of the cost approach in property valuation? Is it A, market rent analysis, B, sales comparison analysis, C, depreciation estimation, or D, operating expense analysis? The answer is C, depreciation estimation. The cost approach involves estimating the cost to reproduce or replace the property, less depreciation, plus land value. It is often used for unique or new properties where comparables are scarce. In the income approach to valuation, what is the capitalization rate used for? Is it A, converting income into property value, B, determining construction costs, C, adjusting for market conditions, or D, calculating depreciation? The answer is A, converting income into property value. The capitalization rate, or cap rate, is used in the income approach to convert an income stream into a property value, indicating the investor's desired rate of return. What factor is least likely to require adjustment in the sales comparison approach? Is it A, location, B, property size, C, condition, or D, age? The answer is D, age. Location, property size, and condition often require adjustments. However, the age of the property may not need adjustment if it doesn't significantly affect value or buyer perception. Let's continue with a look at Arkansas real estate financing. Mortgage loans and financing options. What is the primary purpose of the Arkansas Mortgage Loan Company Act? Is it A, to regulate mortgage lenders and protect consumers, B, to provide tax incentives for first-time homebuyers, C, to increase competition among mortgage lenders, or D, to set interest rates for mortgage loans? The answer is A, to regulate mortgage lenders and protect consumers. The Arkansas Mortgage Loan Company Act is designed to regulate entities involved in mortgage lending, ensuring they operate fairly and transparently, thus protecting consumer interests in the mortgage market. Which type of mortgage is most likely to benefit a borrower planning to stay in their home for a short period? Is it A, fixed-rate mortgage, B, balloon mortgage, C, interest-only mortgage, or D, adjustable-rate mortgage? The answer is D, adjustable-rate mortgage. An adjustable-rate mortgage typically starts with a lower interest rate than a fixed-rate mortgage, making it beneficial for short-term homeownership before rates adjust. In Arkansas, What is the typical down payment percentage required for a conventional mortgage loan? Is it A, 10%, B, 20%, C, 30%, or D, 5%? The answer is B, 20%. Conventional loans typically require a down payment of around 20% to avoid private mortgage insurance, though some lenders may accept less with additional insurance costs. What is a key feature of a USDA loan available in rural areas of Arkansas? Is it A, requires a 10% down payment, B, available only to first-time homebuyers, C, offers 100% financing, or D, has higher interest rates than conventional loans? The answer is C, offers 100% financing. USDA loans offer 100% financing, meaning no down payment is required, making them an attractive option for eligible buyers in rural areas. Loan applications and approval processes. What is a key requirement for a borrower when applying for a loan in Arkansas? Is it A, proof of residency, B, a letter of recommendation, C, government-issued ID, or D, social media account? The answer is C, government-issued ID. In Arkansas, borrowers must provide a valid government-issued ID to verify their identity as part of the loan application process. This ensures compliance with state regulations and helps prevent fraud. Which factor primarily affects the loan approval process in Arkansas? Is it A, credit score, B, marital status, C, number of dependents, or D, social security number? The answer is A, credit score. Credit score is a critical factor in the loan approval process, as it reflects the borrower's creditworthiness and ability to repay the loan. Lenders heavily rely on this score to make decisions. What documentation is commonly required for self-employed individuals applying for a loan in Arkansas? Is it A, pay stubs, B, tax return, C, employment contract, or D, credit card statements? The answer is B, tax return. Self-employed individuals often need to provide tax returns to demonstrate their income and financial stability over a period. This helps lenders assess the borrower's ability to repay the loan. Which entity primarily regulates loan applications in Arkansas? Is it A, Federal Reserve, B, Consumer Financial Protection Bureau, C, Arkansas Department of Finance and Administration, or D, Arkansas Securities Department? The answer is D, Arkansas Securities Department. The Arkansas Securities Department oversees the regulation of loan applications and financial services within the state, ensuring compliance with state laws and protecting consumers. Arkansas mortgage disclosure requirements. What is the minimum requirement for lenders to provide a borrower with a mortgage disclosure statement in Arkansas? Is it A, 1 business day before closing, B, 3 business days before closing, C, on the day of closing, or D, 7 business days before closing? The answer is B, 3 business days before closing. In Arkansas, lenders are required to provide borrowers with a mortgage disclosure statement at least 3 business days before closing. This ensures borrowers have enough time to review the terms and conditions of the loan. Which document must be provided to the borrower to comply with Arkansas mortgage disclosure requirements? Is it A, loan estimate, B, deed of trust, C, purchase agreement, or D, promissory note? The answer is A, loan estimate. The loan estimate is a crucial document that must be provided to borrowers, detailing the estimated interest rate, monthly payment, and total closing costs for the loan. What is the primary purpose of the Arkansas mortgage disclosure requirements? Is it A, to increase lender profits, B, to expedite the loan approval process, C, to provide transparency and protect borrowers, or D, to simplify mortgage documentation? The answer is C, to provide transparency and protect borrowers. The main goal of these requirements is to ensure borrowers receive clear information about their mortgage terms, helping them make informed decisions and protecting them from predatory lending practices. Under Arkansas law, when must a lender provide a revised loan estimate? Is it A, after the loan is closed, B, only if requested by the borrower, C, never once the initial estimate is given, or D, if there are significant changes to loan terms? The answer is D. If there are significant changes to loan terms, a revised loan estimate must be provided if there are significant changes to the loan terms, such as interest rate changes or alterations in borrower qualifications, to ensure continued transparency.
Don't forget to comment below with your tips, challenges, and thoughts on exam preparation. Your experiences can make a big difference for others.
Arkansas-specific loan programs. Which Arkansas-specific loan program is designed to assist first-time homebuyers with down payment and closing cost assistance? Is it A, Arkansas Homeowners Assistance Fund, B, Arkansas Dream Down Payment Initiative, C, Arkansas Rural Development Loan, or D, Arkansas Mortgage Credit Certificate Program? The answer is B, Arkansas Dream Down Payment Initiative. The Arkansas Dream Down Payment Initiative helps first-time homebuyers by providing financial assistance for down payments and closing costs, making homeownership more accessible to eligible residents. What is a key feature of the Arkansas Mortgage Credit Certificate Program? Is it A, it provides direct financial grants for home repairs, B, it reduces the interest rate on home loans by 2%, C, it offers a tax credit for mortgage interest paid, or D, it guarantees loan approval for all applicants? The answer is C, it offers a tax credit for mortgage interest paid. The Arkansas Mortgage Credit Certificate Program offers a tax credit for a portion of the mortgage interest paid, helping to reduce the federal income tax liability for eligible homeowners. Which entity administers the Arkansas Development Finance Authority home loan programs? Is it A, Arkansas Development Finance Authority, B, Federal Housing Administration, C, Arkansas Housing Network, or D, Arkansas State Treasury? The answer is A, Arkansas Development Finance Authority. The Arkansas Development Finance Authority administers various home loan programs, including down payment assistance and affordable housing initiatives aimed at supporting home buyers in Arkansas. What is the primary purpose of the Arkansas Rural Development Loan? Is it A, to fund urban infrastructure projects, B, to provide grants for agricultural businesses, C, to offer tax incentives for real estate developers, or D, to promote homeownership in rural areas? The answer is D, to promote homeownership in rural areas. The Arkansas Rural Development Loan aims to promote homeownership in rural areas by providing affordable financing options, thereby supporting community development and economic growth in less urbanized regions. Arkansas Development Finance Authority. What is the primary purpose of the Arkansas Development Finance Authority? Is it A, to regulate real estate transactions in Arkansas, B, to promote economic development through financial assistance, C, to manage state education funding, or D, to oversee healthcare services in Arkansas? The answer is B, to promote economic development through financial assistance. The ADFA's main goal is to provide financial assistance and support to promote economic development in Arkansas. It achieves this by offering loans, grants, and other financial instruments to various sectors. Which of the following is a key function of the ADFA in supporting housing development? Is it A, issuing tax-exempt bonds, B, providing direct construction services, C. Setting housing prices. Or D. Regulating rental agreements. The answer is A. Issuing tax-exempt bonds. The ADFA supports housing development by issuing tax-exempt bonds, which help reduce the cost of financing for developers, making housing projects more feasible and affordable. How does the ADFA contribute to small business development in Arkansas? Is it A. By offering tax incentives directly? B. By providing free marketing services? C. By offering loan programs? Or D. By managing business licenses? The answer is C. By offering loan programs. The ADFA supports small business development by offering loan programs that provide necessary capital, helping businesses to expand operations, purchase equipment, or manage cash flow effectively. What type of projects does the ADFA typically finance through its bond programs? Is it A. Private luxury residential projects? B. Retail shopping centers? C. Personal consumer loans? Or D. Infrastructure and affordable housing? The answer is D. Infrastructure and affordable housing. The ADFA finances projects like infrastructure, affordable housing, and educational facilities through bond programs, which provide low-cost financing options to support community and economic development. Now, let's take a look at some Arkansas disclosure requirements and forms. Arkansas-specific disclosure requirements. What is the primary purpose of the Arkansas Property Disclosure Form? Is it A. To estimate the property's market value? B. To disclose known defects and issues? C. To outline zoning regulations? Or D. To provide a history of ownership? The answer is B. To disclose known defects and issues. The Arkansas Property Disclosure Form is designed to inform potential buyers about known defects and issues in a property. This transparency helps buyers make informed decisions and protects sellers from future liability claims. Which of the following must be disclosed by sellers in Arkansas according to state-specific requirements? Is it A. Material defects such as roof leaks? B. Personal financial difficulties? C. Future construction plans nearby? Or D. The property's assessed tax value? The answer is A. Material defects such as roof leaks. Arkansas requires sellers to disclose any known material defects in the property, including issues like roof leaks, foundation problems, and pest infestations, to protect buyers and ensure transparency. When must the Arkansas Property Disclosure Form be provided to a buyer? Is it A. After the closing of the sale? B. During the home inspection? C. Before signing the purchase agreement? Or D. At the open house? The answer is C. Before signing the purchase agreement. The Arkansas Property Disclosure Form should be provided to the buyer before the execution of a purchase agreement. This allows the buyer to consider the property's condition before committing to the purchase. What are the consequences for an Arkansas seller who fails to provide a required disclosure? Is it A. The sale is automatically voided? B. The buyer must pay a penalty? C. The property must be reappraised? Or D. The buyer may rescind the contract? The answer is D. The buyer may rescind the contract. Failure to provide required disclosures can lead to legal consequences, including the possibility for the buyer to rescind the contract or seek damages if they suffer losses due to undisclosed defects. Which of the following is not typically included in Arkansas property disclosure forms? Is it A. Information about plumbing issues? B. The seller's employment history? C. Details of past pest infestations? Or D. Foundation repair history? The answer is B. The seller's employment history. Arkansas property disclosure forms focus on physical defects and issues with the property itself, not the seller's personal information, which is generally irrelevant to the property's condition. Commonly used Arkansas forms. Which form is commonly used in Arkansas for disclosing property conditions to potential buyers? Is it A, Arkansas Seller Property Disclosure, B, Arkansas Buyer Information Form, C, Arkansas Real Estate Contract, or D, Arkansas Title Disclosure? The answer is A, Arkansas Seller Property Disclosure. The Arkansas Seller Property Disclosure Form is used to inform buyers about the condition of the property, including any known defects or issues, ensuring transparency and informed decision-making. What is the primary purpose of the Arkansas Lead-Based Paint Disclosure Form? Is it A, to disclose asbestos presence, B, to disclose mold issues, C, to disclose potential lead-based paint hazards, or D, to disclose radon levels? The answer is C, to disclose potential lead-based paint hazards. This form is used to inform buyers and tenants about potential lead-based paint hazards in properties built before 1978, as required by federal law to prevent lead poisoning. What information is typically included in the Arkansas Agency Disclosure Form? Is it A, property tax assessments, B, zoning regulations, C, homeowner association rules, or D, agency relationships and roles? The answer is D, agency relationships and roles. The Arkansas Agency Disclosure Form outlines the type of agency relationship between the real estate agent and their client, ensuring that all parties understand their roles and responsibilities. When must the Arkansas Real Property Condition Disclosure Form be provided to the buyer? Is it A, after closing, B, before making a written offer, C, during the home inspection, or D, after the appraisal? The answer is B, before making a written offer. The disclosure form should be provided before the buyer makes a written offer. This timing ensures that buyers are fully informed about the property's condition before committing. Which party is responsible for completing the Arkansas Real Property Condition Disclosure Form? Is it A, the seller, B, the buyer, C, the real estate agent, or D, the home inspector? The answer is A, the seller. The seller is responsible for completing this form, as they must disclose known defects and conditions of the property to potential buyers to ensure transparency and compliance. Specific procedures for transactions. Which document must be provided to a buyer in Arkansas prior to the completion of a real estate transaction to disclose the property's condition? Is it A, title insurance policy, B, seller property disclosure statement, C, homeowners association bylaws, or D, deed of trust? The answer is B, seller property disclosure statement. The seller property disclosure statement is required in Arkansas to inform the buyer about the property's condition, including known defects. This document helps buyers make informed decisions. What is the primary purpose of the lead-based paint disclosure form in Arkansas real estate transactions? Is it A, to outline the financial terms of the sale, B, to provide a history of previous owners, C, to list all previous renovations, or D, to inform buyers about potential lead paint hazards? The answer is D, to inform buyers about potential lead paint hazards. The lead-based paint disclosure form is mandatory for properties built before 1978 to inform buyers of potential lead hazards, ensuring they are aware of health risks before purchase. In Arkansas, who is responsible for delivering the property disclosure form to the buyer? Is it A, the buyer's agent, B, the lender, C, the seller, or D, the title company? The answer is C, the seller. The seller is responsible for providing the property disclosure form to the buyer, ensuring transparency about the property's condition and any known issues. What must a seller in Arkansas disclose about the property if it is located in a flood zone? Is it A, flood zone status, B. Zoning regulations. C. Local school districts. Or D. Proximity to public transport. The answer is A. Flood zone status. Sellers must disclose if the property is in a flood zone, as this impacts insurance requirements and potential risk to the buyer, ensuring informed purchasing decisions.
Thanks for joining us today. If you found this video helpful, subscribe to our channel for more practice exams, tips, and tricks. And don't forget to visit Birdsy.ai for complimentary study sessions with Birdsy, your AI-powered study partner.